Hi traders, Nathan Bray here from ACY Securities, and welcome back to our 5-part education series on price action trading. So the first session, we had a look at the concept of trend, understanding trend and how to use it in your trading. So part 2, we're going to look at 2 of the most essential concepts in price action trading, and that is support and resistance. So I like to think of it simply as a roof and a floor, okay? So let's say price is trending down, okay, regardless of your time frame. Support is identified as a level where the market is expected to pause. It could be temporarily, or we could see a reversal. So effectively, it's going down to a point where we're seeing a concentration, a large group of buying pressure. The market's seeing that as potentially temporarily cheap. So, or they could be people that are short looking to close out those short positions at a particular price point. So the way we identify it is we go back historically and we look back, and I'm not suggesting that this is the perfect method, but it allows us to identify in a reasonable time frame where the market, the buying pressure had come in before, or where the concentration and accumulation had occurred. So we can use that almost as a guide to enter into a buy. So if we're in a short position, we'll say, right, we're expecting, for those reasons, a potential buying support to occur. So we'll call it support. It's supporting the buying in the market. Now, conversely, on the other hand, we can look at resistance. So resistance to me is like if you're in an uptrend and you're looking at an area where you think there could be a pause in this uptrend, meaning there's a lot of concentration of selling pressure. So the sellers are coming over there, and maybe at this level, the buyers at a higher level mightn't be deemed as interested in buying. And those two things can reverse in either a temporary delay in the rising trend, or we could see a correction, or perhaps we could see a complete reversal. So I'm going to start with the roof in the market. So let's go and have a look at the Aussie-Yen chart, and let's give you examples on multiple time frames of how to identify resistance. So we're looking at a monthly chart here over a long period of time of the Aussie against the Japanese yen. And what I want to look at is this idea of where resistance can come into play. Now, we do have a really simple indicator available for all our live registered clients. We can help you customize this, where the support and resistance levels are shown by this series of dots. So that's a very simple way of seeing how long, in this case months, how many months is how many dots this particular level did hold as resistance until another level took over. Okay, so that certainly is available. But if we go back in time, what I've done is look back and seen all the way back in around 2008, price was very strong, but there was this previous resistance at about 104.70 odd, okay, and price didn't want to get much above that. If we fast forward, we see this similar level held. This period here, all these months, the Japanese yen looked extremely weak against this Aussie dollar, okay? So we've seen it fly up, but guess what happened? It got to this same level, okay, and failed. So this is an example of where price can either fail at this level, or price can pause at this particular level. So we're looking at that 105, 45, 42 area. And if you were to look back through these months, you'd be thinking, this thing is literally going to the moon. Nothing's going to stop it. Whereas what we're saying is, let's look historically as a medium of exchange and say, you know, previously, where did the market view it as too expensive? And in effect, where did the selling pressure start to kick in? So this is an area where we use support and resistance to gauge where might this trend pause or get some form of correction at. So that's why when we look at the current scenario now, it looks very similar, but we have seen a really strong move up, a weakening in the Japanese yen, And the Aussie against the Japanese yen has been incredibly strong, and now it's stopped almost in this same zone with those dots dictating it. So let's go down to a weekly chart. I'll make it a bit bigger for you so we can zoom in and understand. So you see we did get this spike where it tried to get into this level again, and we got a very strong rejection. It's built up over the last sort of 3 or 4 months, and we got to that same area again where those dots are, resistance dots. In this case, it's getting a fraction higher at 104.93, but failing. And that's what we're seeing at the moment, week by week. Let's move on to daily. And we start to see a daily failing and putting in lower tops and bottoms. Okay, so it's what we're using this resistance level. Even if we are very bullish on the Aussie yen, we may think, well, do I really want to be a buyer up at a level where historically price has failed so many times? Okay, so this is an example of where you might utilize your support and resistance, or in this case, the roof or resistance, to think, do I really want to be a buyer up at a level where the buyers seem to be overcome by selling pressure? And that's how we're using it, either as a target, or if we are looking to get short, we can use these levels as areas where perhaps we could place stop losses or determine our risk. Now, let's go on to gold. So let's take a look at gold to understand the support levels. So we've talked about the roof with resistance. Let's have a look and talk about gold when it comes to the floor. So as we can see here, price at the moment, and it's very simple, this is a daily chart. So if I'm looking at a daily chart, I just go from where price is now and look left to see where the dots are. This is the previous bottom. So let's just draw that in. We'll just use a horizontal line. You can make it exact. It's very simple to do, and in Duncan Cooper's webinars, he'll explain that to you. So there the dots are right there. And as you'll notice this week, we've seen further selling pressure on gold, but you'll notice on a daily basis, price seemed to come down and pause at the moment and failed to go below it. It did go below here, you can see the wick, but by the end of the day, it had reversed, okay, and respected that previous level of support at sort of 23.25. Next day, same thing. Next day, same thing. Currently, it's above that level. So if you're looking to short gold, okay, you might think about that. Do I really want to short into this level of support where there appears to be an accumulation and predicted accumulation of potential buyers there? So that's why we're using support and resistance in our trading to try and identify where potential areas in a trend might fail, okay, and pause for some time, or we could get a potential reversal, which we saw there on that Aussie yen. So that, folks, I guess is a really simple example of how you can identify using this indicator of resistance levels or roofs in the market, where historically you're using the level to identify where there might be an accumulation of selling pressure. And of course, on the floor side or the support side, we're using it to identify where there could be an accumulation of buying, or what they call buying support in the market. Okay, so let's have a look at combining both trend and support and resistance together to identify levels that you might want to isolate for trading opportunities. So in this example, we'll go back to gold. We can see that the trend on the daily chart is definitely up. It's putting in higher tops and bottoms, okay? And therefore, what we could do is look at price at the moment. We could say, fine, I'll just, because it's going up, I could just go straight in and buy because the trend is your friend. Or we could say, okay, let's wait for price to pull back, because as a buyer, ideally you want to buy it at the cheapest possible price, in line with that trend. And could I find a level that was previous support and that may act, and I'll get a pullback to that previous level of support, but still have a bias towards being a buyer in line with the trend. So let's use this level that we spoke about, this 23.24 level, and rather than buying up at $100+ we wait for a pullback. So what we're saying is we want to be a buyer because the trend is still up, but we want to have price pull back and show that a previous level of support or resistance is starting to be respected again. Okay, so if we move forward, you'll see we've got this large amount of sell-off occur over a few days, and we're coming all the way back down to this level. So if that's our plan, then we're using buying in line with the trend, but we're trying to identify a level of support as well. So as we move forward another day, you can see price, as expected, uses that support level, which is previous resistance levels here, and becomes support. So it's almost like the roof becomes a floor, and that's what we're looking for in price action. And that way we can see this area, and you can see right now, price at the moment is holding here, and that level is being respected. So whatever our trigger is to entry, in this case, we're combining both properties. We're saying, I want to trade, have a bias towards being a buyer, but I would also like to see price come back and show where previous resistance or support is respected again. So I'm using two different confluences, two different reasons. And I think on gold at the moment, I'm really looking to see if the buyers are going to come back in as buying support in line with the bias of the longer term uptrend. Let's have a look at the reverse. So if we're looking at a few other examples, so I might look at, say, let's look at the Aussie against the US, and we'll see if we can find some examples here. So on this Aussie dollar, on a 4-hour here, we can identify it's putting in lower tops and bottoms. So if you can identify a break through of a support level, and you can also identify that the trend is down, then what we're looking for is combining the two. So we might mark in these levels of support and say, okay, let's see a price, it's broken down, I want to be a seller, so could I get a rally back up and see where this previous floor starts to act as a roof? So what we're doing is saying, oops, I missed this trade, the trend is down, so what I'm waiting for is for price to come back up and show that it's respecting that previous floor, potentially as a roof. And you'll notice it tries to get higher than that previous bottom, but it actually begins to act as resistance and price moves down. If we go down to the next level of support, here I'll just draw it approximately, you'll notice that price breaks through it, rallies back up, and you see these spikes. They almost bump straight into it. They go up for a retest. So in effect, what we're doing as sellers is wanting to trade in line with the trend, but we're also looking for levels that we'd be interested to enter or sell because we're combining a confluence of two reasons. Trend in line with previous significant support or resistance levels that we want to combine the two. And that's how you can identify key trading levels in the market. So if you would like to see further analysis using these two concepts, please join our own senior market strategist, Duncan Cooper, and he'll take you through a more advanced version in our live market analysis 3 nights a week. Keep in mind though, we'll be coming up with part 3 of this course where we're going to be looking at retracements and then how to combine all 3 elements together to identify key levels in the market with a confluence of trading reasons. I look forward to joining you then.